Hey everybody, welcome to the founder investor panel. Is that what we're calling it? I don't know. So my name is Ryan Hoover. I started Product Hunt and now run Weekend Fund, investing in early stage companies. And we want to talk with some friends of ours who are also founders and also investors. We'll get to them in more detail here in a second. But first, some context on like why I'm here and kind of what I'm doing. So AngelList acquired Product Hunt back in end of 2016. And it was actually after that that I started investing. So I actually wasn't investing prior to that. This is about 5 years ago, started Weekend Fund. And what's interesting, we just pulled some data just before this. What's interesting is at the time, there weren't a lot of founders who were starting funds. And frankly, I had, immense imposter syndrome. I was like, is anybody going to give me $1 million to start a fund? I had doubts of that. And this was 2017. Back then there was, well, I don't know if I can say the number, but not very many founders starting funds at that time. Fast forward to today on AngelList is about 10x the number of founder-led funds on the platform. And yeah, that's 5 years ago, quite a while, but 10x is pretty substantial. And we've also seen just this rise in more founders, whether it's, doing SPVs or raising funds themselves, deploying capital into other companies. So this trend is quite interesting. And it's also, we'll get into maybe how it affects or doesn't affect the VC ecosystem as a whole. But for anyone who's interested in, maybe starting a fund or actively investing as a founder, this should be hopefully insightful. And we'll learn from some folks that are doing it right now. So let's do some intros. Sophia, how are you doing?
I'm so good. Yeah, I'm in Los Angeles. It's like pretty sunny out and I'm super caffeinated. Thanks
There
for
you go.
having me. I've founded a few companies. The first one was called Nasty Gal. It's a fashion business. I bootstrapped it and then raised $50 million from Index Ventures, built it to over $100 million in revenue, wrote a book called #GirlBoss that became a New York Times bestseller. And this word that's followed me and became political in a whole bunch of ways that I've been tweeting about, which is really fun. And today I'm the founder of something called Business Class. It's bootstrapped. It's not something I have 2 employees. It's something that's super manageable. It's a digital education platform for entrepreneurs. It's not an accelerator. It's mostly for really small, really early bootstrap businesses. And then I angel invest. I've angel invested. And I guess as of today, I'm talking about a fund that I am in the midst of raising, and I can talk about it because I was on the phone with Ryan earlier today and I was like, should I do this 506c thing?
I'm not a lawyer though, so I don't know.
I know
Should you be listening to me? I'm
I'll
just kidding.
talk to lawyers. Sure. I've looked
Yeah.
to you for a lot of guidance over the years. So thank you. And thanks for having me here. So yeah, I have a fund called Trust Fund. I've invested over $1 million of my own dollars in over 20 companies like Liquid Death and Pipe and Pogo and public.com and Pop Shop Live and Superhuman, and have been able to get a little bit of allocation in those investments. And I'm just carrying that deal size and my deal flow into a fund now. And it's not full time. I'm not fighting for allocation. It's an extension of what I've been doing. It's not my full-time gig. And yeah, I have 3 poodles and exist mostly in this office.
So you got dogs, upcoming fund, and a startup. Very cool. Immad, you've invested in a bazillion companies. I feel like you've been actively angel investing and fund investing for a while. Yeah, give it a brief intro of yourself.
Sure. So I started doing startups in 2006. I currently run Mercury, which is a bank for other startups and entrepreneurs. That's my major percentage of my time. But I've also been doing kind of startup investing since 2016. I've done about 280. I still do like 10 per quarter or so. Mostly seed stage. It's fun helping entrepreneurs. I've done Airtable, Rappi, Substack, Papa. That's another 280. So I forget all their names. But yeah, I mostly do it to help entrepreneurs, and yeah, it's always fun to hear interesting ideas and be part of their journey.
Mm-hmm. Well, your business, Mercury, is like serving entrepreneurs. So there's a nice I hate using the S word, synergy, but there is a bit of synergy, I imagine.
Yeah, definitely. It helps get, I guess, deal flow, and it's also nice for me to get feedback on Mercury and things like that, and have a direct avenue to like early stage companies.
Karine, you have, we'll talk more about your fund and your strategy, but you have a unique kind of approach. But yeah, what's your background, and introduce yourself?
Yeah, hi. I'm Karine. It's great to be here. I actually grew up in Palo Alto, so like in the heart of lots of startups, but I'm calling from LA now as well. I spent the last couple of years really within fintech and e-commerce. Started at a firm, actually went through YC in 2017 with an e-commerce business, and started Slope, which is what I'm doing now, shortly after. So Slope, really, we are a hybrid creative agency and venture fund focused on working with early stage startups. On the agency side, we provide design and marketing services and have worked with over 200 plus venture-backed startups like Eco, Daily Harvest, Clover Health, etc. On the fund side, we raised a $5 million fund one last year from external LPs like Bain, Carta, Awesome LPs, and have invested in over 15 early stage startups to date. And it's been a lot of fun.
Your work is awesome. I emailed you prior to this panel, and the stuff you guys have done is just so beautiful. And I just hope at some point I get to work with one of my portfolio companies or with you directly on something creative. So
thank you, Sophia. That means a lot
because nobody can see it right now,
That means a
Yeah,
lot.
I mean, the agency combined with fund strategy is very, very interesting. We should talk about that later.
Totally.
Siqi, I think we met, I don't know when we met. We're thinking you're doing the gaming stuff or consumer social stuff. But yeah, what's your background?
Yeah, that was my first company when I was still doing gaming. So yeah, similar to Immad, started getting into startups in '07 during the Facebook gaming boom. So ran that company that was acquired by Zynga. I was head of product at the company through the IPO, started another company, which went through some twists and turns, which we won't get into, but we were acquired by Postmates. I ran product and growth there for about a year. Then went on to run a company called Sandbox VR, which is also pretty twist and turning. I bring it with me, I guess.
By the way, Sandbox VR, amazing experience, like the best VR experience I've ever had. I have a video, it's on Twitter somewhere. Well, maybe you can put it in the show notes if we have show notes. I don't know if that's a thing, but yeah, really cool product.
New experience. I played it last week. It's pretty great. But yeah, so now I run a company called Runway, and we help people with money on Mercury plan what they want to do with that money over the next couple of years. So it's basically next generation financial planning analysis. We call it Figma for Finance. And on investing side, I started investing in 2010 was my very first investment. And I think a year later it 10x and I got my money back, and it's been house money ever since. So it's been great. I really wanted to get into angel investing in 2010. I just got a small amount of money from the exit, and I just literally wanted to put angel investor on my LinkedIn because I thought I would get like unsolicited business plans, and I just wanted to learn what it was like. And so now a little under 200 companies in now, and started a rolling fund just to roll in people who wanted to co-invest about a year ago, and that's it.
What's the trust fund URL, Sophia, for those that are watching?
Trustfund.vc. What's amazing is that I named it. People are so incredible. I had like a kind of janky Squarespace site, and this guy DMs me on Instagram and says, I made a website for Trust Fund in Webflow. Let me know take a look and let me know if you want to use it. I've literally hired teams to make websites for me that I've gone back and forth on for a long time. And he literally delivered something like awesome with no direction. And I was like, great. And he transferred it to my Webflow account, and that's the website. So I don't even know if I can take credit for anything other than doing it.
Did you pay for it?
No. He was just like, thanks for everything that you've done for entrepreneurs. Here is this full-blown beautiful website. People are incredible. Anyway, yeah.
That's awesome. It's really well done. We had something similar with the Weekend Fund logo, and this guy named Jamie Peak was like, hey, I have some free time. Like, I'd love to make you a logo. And I'm like, really? Like, sure. And so that's what we're using now. And I was like, oh, it's cool. So let's talk about like why you're actually investing anyway. So you all are founders. You're all building a company. Some of you have poodles as well. Like, why are you spending time, raising a fund, deploying a fund while also founding a company? Who wants to kick that off?
Why? Because I like building businesses. I'm like a masochist. I like doing more than one thing at once. Being a founder, continuing to be a founder, continuing to network with founders and learn as a founder as the world changes is really important as an investor, as a founder investor. And I'm investing because naturally deal flow has come to me. Ryan, you've been so supportive. And I think everybody on this panel maybe has the opportunity to share that at some point. And I love working with founders, and that's what I'm doing with Business Class. I'm building something for them. There's very few things more rewarding than harvesting the hardship and the learnings I experienced building something massive and like kind of fucking it up as well along the way, than passing that along to founders so they don't have to see around the same corners that were blind for me. So I just love it. It's like all I want to do, and I get to do it on a few different fronts. And now I get to continue doing it slightly more professionally.
Mm-hmm. Yeah. I mean, you've been angel investing for a while now with the fund. It's almost like, well, now you're committed to other outside capital, to deploy as well. Immad, I mean, there's a clear like strategic alignment with you investing with your business Mercury, but like what kind of motivates you to invest?
I started investing initially because I thought maybe that's what I wanted to do as a job. So in 2016, I just sold my startup and I was like, oh, maybe I want to be a VC. Let's see what it's like. And I was pretty bored vesting in peace as it was. So I went invested in 30 startups in the first year, and I quickly decided that that's not what I wanted to do full time. Honestly, I probably wouldn't have a fund if AngelList hadn't made it so easy. It's just it's not. I was telling someone the other day that I've only ever spoken to, I think, 2 of the LPs that are backers for my rolling fund. Most of them have, come from my Twitter following or from the AngelList network. So I would be investing probably no matter what. The fact that I do it from a fund is just because it's been so easy to do it from a fund, and I can be a little bit more impactful. And I think my wife would be a lot mad at me if I was investing at a similar pace with just my own money. In terms of why I do it, I don't know, it's just really fun, right? Like, I think it's a real privilege to hear like entrepreneurs to tell you like their sick ideas. Like, it's some of the best like if I think about like all the conversations I had in the last like 30 days, it's some of the best conversations are entrepreneurs kind of like telling me their story. So I think that's the biggest reason for me, like learning from entrepreneurs and like being part of their journey is fun. And I want to try to give back. I've been helped along the way by lots of good investors, angels, and mentors. So yeah, I think it's nice if I can like try to give back a little bit as well.
We should also talk about like rolling funds too. And I'm not sure if the audience will be familiar with rolling funds, but kind of the way I describe it is it's like a Netflix subscription for LPs, in the sense that, you as an LP, you might want to commit, quarter by quarter to back Immad or Siqi's rolling fund. And you can cancel, usually there's some sort of like minimum commitment, but you can cancel, if you need, if you're cash strapped, let's say, at some point. But then as a GP, you can take on LPs at any point. So you don't necessarily need to wait, sometimes 2+ years to raise your next fund. But yeah, why did you go with the rolling fund, Immad, versus more of a traditional route?
It's really a low commitment thing for me and the LPs. Like, I can stop doing the rolling fund any quarter. Normally when you go raise from LPs, you're at least committing for 2 years, and normally it's not worth doing a fund unless you're going to do 2 or 3. So you're kind of committing for 6 years, which, like, I'm an entrepreneur. Like, I might, Mercury might get like way crazier next year and I have to like step back. So I didn't think it was fair to do a big fund and not have that flexibility. And I think the rolling fund like does it very cleanly. Like, it's very clear to the LPs what the level of commitment is, and it's very clear to me. So I think it's like a very smooth thing for me. I actually think a lot of the time people like often think about these things as like either or, but I actually think the set of LPs that are doing rolling funds and the set of GPs that are doing rolling funds are a different set on both sides than the people who would do traditional funds. Like, I would just not do a traditional fund right now, I think. And I think most of the LPs that back me wouldn't have access or are not like institutional or high net worth LPs that would be doing normal funds. So it's actually like almost not a competitive product on the whole. I think it's like a separate set of people on both sides, which is an interesting thing to contemplate, because like people always think of these things as like zero sum and competitive.
Siqi, why did you decide to do rolling fund versus a traditional fund?
Very similar reasons. I thought about it in terms of optics. I run like Immad, a company full time. And so it just felt like is sort of a dip your toes in the water kind of move rather than, oh, I'm going to have a side job running a fund. The fundraising process is also quite different, right? The idea of like, oh, I'm going to go and raise versus, hey, I have a link. If you want to co-invest, here's a link. You can, cancel anytime. It just feels extremely light commitment. And so it was just very convenient and an easy way to redirect existing interest into a vehicle.
Yeah, it does lower the barrier for both parties significantly. We actually ended up going with the traditional route. Now I'm not building a company at this time, so there's like different motivations or different like challenges, I suppose, that I have that you face with building and investing. But Karine, how do you? Tell us more about why you're investing. Like, is it also for strategic alignment with Slope Agency, or how do you think about that?
Yeah, I think, my personal story, maybe to give a little bit of background. So I'd been angel investing for a couple of years, really, I think echoing a lot of what everyone else is saying. It's fun to support friends. They're some of the most like energetic conversations you can have. Really the reason I started the agency actually, it was actually in 2019, after the YC company, was to just really solve a personal pain point and like build the agency that me and my co-founder wished we had as founders. We'd gone through YC with the e-commerce business and basically had really wanted thoughtful, like creative partners around us when we were building the company. And, I think through the agency, we got to work with incredible founders, startups, really saw them like early stages, like at just an idea and like helping them craft their brand identities and help them go to market and grow. And over time, just, gain that conviction in the companies and actually have like a lot of our founders asked to like invest in their next round. And so, I think the agency really came first and then was really building that business. And then fast forward 2 years after working with, 200 plus startups, it wasn't until early 2021 when we realized there was actually like a really interesting, the S word, like synergy between like a fund and an agency to like add value and almost essentially have the agency act as like an outsourced platform team to help companies with design and marketing. I think we were feeling like a lot of funds were raised and then thinking about building up their platform team. And we were like, hey, we actually have this like really secret sauce, like AKA the agency that has already been working and almost found like product market fit. So, with that, Slope kind of became this like end-to-end ecosystem where capital essentially became like another type of service we could offer startups, which is really what made us like pull the trigger on raising like an institutional fund so we could have essentially like a more stable vehicle to like support our clients.
Yeah, that makes a lot of sense. Let's see how many times we can use the word synergy in this call.
I have a question. Do you take equity and invest like almost like advisory shares in the companies? And what size checks are you writing?
Yeah, we have two different entities. They're both called Slope, but we kind of make those decisions like separately. We'll take on external clients through the agency, but through the fund, we'll essentially selectively invest in clients and just companies we may see through the agency, but maybe aren't good fits as like agency clients. So typically we don't do like services for equity. We kind of make that like investment and then get the equity that way. And we're typically writing very like collaborative checks, which is really fun. So we get to work with like Weekend Fund, obviously, typically writing like 100 to 250K checks.
Well, I think it's for you, especially Karine, it feels like synergistic for you to be investing. But there are some people who have VCs backing their company and they're like, oh, I don't want the founder or the CEO to be investing, let alone starting a fund. This is something that I was very cognizant of, before Product Hunt was acquired. I was very, at the time, really worried, like if I was to start investing, would my investors think I was unfocused, or they think I'm not committed, or does it look like I'm hedging, financially, or from a career perspective? And that also was at a time too, pre-2017, when there just wasn't as much of this going on, like founder-led funds. But like how have you navigated that? Maybe Immad, maybe you can kind of chime in on this. Like how have you navigated that with Mercury in terms of optics and just managing kind of the workflow of managing a fund and building a company?
I say this sometimes like somewhat facetiously, but I think it's true that like Elon Musk doing like several things has like given permission to a lot of entrepreneurs to do several things. There was definitely a feeling a few years ago that you could only do one thing. But now, I think it just gives you a little bit of cover. Obviously, not everyone is Elon Musk. I think it helped a lot that I was doing this very actively before I started Mercury, and there's just obvious synergies with Mercury. I think about, like, we had 30 alpha customers before we launched, and I believe like maybe 25 of them were companies I'd invested in, just because we were serving early stage startups, and obviously those were people that I knew well, and I obviously didn't force them to do it. They wanted to try it out. So there were obvious reasons why it made sense as a Mercury founder to be investing in early stage startups, since those were our main customers. It has actually never come up. Even I haven't even felt it was like an underlying reason why investors weren't investing or weren't excited. I think in general, it's been a positive. The other big thing, which I never realized until I started investing, is that as an entrepreneur, I never spoke to investors the right way until I started investing, and I could see how other entrepreneurs spoke to me. And it's just very, like, you can hear people describe like, oh, this is how you should be saying things, or like when an investor asks a question, actually, like, you should be not answering the question, but like trying to understand what's their objection and trying to answer the objection. So there's all of these like subtle things that you hear about, but until you're on the other side of the table, I don't think you get it. So net, I would say it's been much more positive with how I've interacted with investors and how successful I've been with investors after I started investing.
Yeah, I mean, so Sophia, you've started a few VC-backed companies, and you were angel investing. I think, were you angel investing back in the Nasty Gal days, or only during Girl Boss days?
I invested in First Dibs in 2013. But there wasn't a ton between them. Between maybe then, I don't know, 2018 or 2019, I invested in Liquid Death in 2019. So really it's been the last 3 years or so. Last year I was really active, probably too active. I'm selling a little bit of secondary in a couple of these companies because I'd like to reinvest it. And I think we're all thinking about our cash positions right now. When I was building Nasty Gal, I wrote that book, and it's not a fund, but it was something that my investors saw, and my team also saw as something that I was also doing. And that can affect more than, yes, your investors, but also the team's morale and how they think about your focus on the business and how committed you are to the business and how much you're talking about the business versus other things. And that was something, there was certainly some sentiment around, and something I heard and didn't feel like a positive thing. The world has also changed. So the whole, your butt needs to be in a seat. You have to be working 40 hours a week on one thing for both founders and 40, whatever, for founders and also employees has really changed. So what is most important is your contribution, and however much time that takes for anybody, including somebody on my team, if it means their day ends early, that's okay. If, they work a few hours on a Friday, as long as the work gets done, I think is what matters most. And I think that sentiment has largely come out of the workforce, who were just unwilling to burn themselves out and also want to have their own projects. There was a time where I had a creative team and I was like, you guys are doing freelance stuff outside of this job. How do you have time for that? It's competitive. I was very kind of focused on owning these people's time. And that's just completely unacceptable now. Everybody does things on the side. It's probably unacceptable at the time, but this was so many years ago. So I think just in general, the world has changed, and investors and employees and people generally understand that we're all multi-hyphenates and building more than just one thing. And hopefully people understand after conversations like this, and if we are talking to our teams or our investors, that they have the kind of context that this conversation provides, that articulates the benefits of being a founder VC and the benefits that can have to a company that's, if you're also building one.
Yeah, the multi, I don't know if multi-hyphenate, because I've used that same terminology. I don't know if it's the right word for us to use, because it feels Sophia is cringing a little bit with it is kind of a weird term. We need something better, but
sorry.
No, I would use it too. I have before. but it is a trend. So we're talking about like founders also, starting funds, investing in companies, but there are also, people who have multiple businesses, an e-commerce business, a podcast, a day job, and we're seeing a lot more of that. Just with the rise of, I think social media actually is a big driver of that. People having an audience that they can then monetize. In the case of not directly, but sort of indirectly, you're essentially accruing social capital. That's kind of what investing is to some extent. You accrue social capital, trust, relationships, knowledge, and then you leverage that sometimes through investing. And like Siqi, have you come across any issues or like concerns with your team or investors or anything around like investing and building Runway?
For Runway in particular, definitely not. It seems fairly synergistic to be exposed to early stage companies and building something for early stage companies. And actually, that was partially a rationalization of like why Runway might have been a good idea when I started it. It was like, well, I'm already investing, and this seems fairly synergistic with that. So no, not particularly. And I personally found as a founder, one of the things you get out of it is it does make you, I think, a better operator. I think for me in two specific ways. One is being exposed to various dimensions of excellence. I've learned so much from investing in these companies, reading good investor update, talking to a founder about here's how we do project management. Well, oh my God, I never thought of that before. We stopped using Slack. So that was really helpful. There was also this like mental health aspect to it, which is all of the problems that come to you as a founder are always like just intractable and wicked problems. And then you talk to other smart founders and you can look at it from an external perspective and you're like, oh, that's really tractable. I've encountered this. And so as an investor, I feel like I would want that for all of the founders I invest in too. So it's not an issue for me as an investor either.
Yeah, I think we maybe we're a little biased by believing this, but I think it's true. There is a lot of benefit, I think, of being an investor as a founder, because I don't know, I've learned so much about other businesses and other industries. Like we've backed, Web 2 companies, Web 3 companies, we've backed consumer social, we've backed B2B boring companies. Boring, I mean, then in the most positive sense. And I've learned so much from just those investor updates, the conversations with founders, and it's given me more perspective where I feel better equipped if I started the company tomorrow to use that knowledge in different ways. Like Karine, how has been being a founder? Well, actually, tell us if you agree. Is being a founder, or rather being an investor, help you as a founder, or how do you think about that dynamic?
Yeah, definitely. I think the agency and the fund, I think kind of like I mentioned, we didn't really start by saying we were going to raise a fund to at the beginning. I think the agency, as we were just working with lots of companies, we saw that the agency really allowed us to like see and work with great companies and even learn about new industries that we maybe weren't even aware of. And then I think obviously allowed us to like provide that very clear value add and actually like win deals for like the fund side. So I think, the agency itself, vice versa, really like benefited from the fund as well, because, we are a creative partner to a lot of venture firms and get to help a lot of companies like all around, even for not investors. And yeah, so I think, I think the way I like to think about it is, if like I were a founder, if you're a founder looking to really actively invest or raise a fund, I think I do like to think about the synergy and like how much overlap is there. The answer like could be none. It could be like unidirectional, bidirectional. I think at first we thought we were like losing focus by like raising a fund. But I think we quickly realized there was a lot of that bidirectional synergy and wanted to start doing that.
I'm going to kind of segue off of that a little bit too. Instead of asking like why people should raise a fund if they're a founder, like why should they not raise a fund as a founder? Like for anyone who's on the call, maybe thinking about raising a fund, like what would be the number one reason you'd say like don't do it?
Don't do it for egotistical reasons. Don't do it for glory. Don't do it for headlines. Don't do it to be relevant. Don't do it for social capital. I've done things for that reason, and it's just the wrong reason, and it doesn't work, and people can smell it like a mile away.
It also takes a lot of your own money. You have to have a GP commit, and often to even get there, you have to have made enough personal investments that you can convince LPs to do it. So I don't think it's cheap. Like you have to allocate like some reasonable percentage of your money that you potentially never going to see again, or at least not going to see for like 10 years. And so, you need to probably have some sort of meaningful exit or something before you can like even think about it actively. I would like, if I had to put a number on it, I'd say you probably want to put aside like 200K or something like that if you're serious about raising a fund from other people. So that's a lot of money that most people can't do.
I'll also add, like, it's a huge time suck for a majority of people. Now, some of the tools that are available now, like rolling funds or 506c funds, where you can publicize it, in public legally, that does simplify and make the process a lot easier versus like the one-on-one private emails that historically you'd have to do before. But it is a huge time suck. And I have a lot of friends who have been spending months, raising a fund, sometimes over a year raising their first fund. And so in some ways, I think that's the biggest reason not to do it, is the fundraising process for a lot of people is just that's just going to be, a lot of work, and you're not deploying necessarily capital. You're not actually like, supporting founders during that time. So what about you, Siqi? Any like gotchas or watch out for this kind of advice for anyone thinking about starting a fund?
That seems like a pretty good one, actually. I mean, in retrospect, I have spent basically zero time raising money because it was my own money, and then it was just people who wanted to invest anyway. I think that's a pretty big one. If I had to spend any time at all raising money and also being a founder, I probably wouldn't do it. Another part of it is, the other part that ends up being time suck is helping your portfolio and actually giving them more than money. It happens. That's a real thing. And the only way I've been able to manage it is I now have mornings on weekends, Saturday and Sunday booked off. It's like, okay, like we can talk, but Monday through Friday, I'm working on Runway. And so weekend time is weekend time. And so it ends up selecting for people who do need help, but then your weekends are half of your weekend shot.
Yeah, that was so I named the fund Weekend Fund for a bunch of reasons, but one of them was that I was building product hunt while investing at a weekend fund, and I kind of described it as my nights and weekends project. But I did actually take weekday meetings sometimes with founders. Well, let's talk about some of the trends too that we're seeing just in venture in general. So we're seeing this rise of kind of the founder fund / investor kind of wave, and we're just generally seeing also a lot of smaller funds emerge. I wish I had some stats. AngelList team has some great stats on this, but I wish I had them in front of me around the number of like smaller funds that are emerging. What predictions? Let's do the predictions topic here, or any thoughts you have around like, what does venture look like in the next 2 or 3 years? Like, do founder-led funds become a bigger part of the venture ecosystem? Does that, I won't say disrupt because it's way overused, but does this kind of trend disrupt some of the incumbent kind of like models of venture capital? Like, how do you guys think about that?
I mean, as a founder, what I wanted were operators. Who I had on my board was a money guy. And had I taken my company public, he would have been a great person to guide me. But what I missed out on was having former founders, operators, executives on my board and involved. And that's really where the value add is. And I think there's a really big advantage to being, not a founder who worked at PayPal, 20 years ago, but someone who's built something more recently. But I'm also hearing kind of like people griping about all these like emerging managers. Like, it's so trendy, and God, everybody has there's a lot of eye rolling. And I think you're gonna get that if you're possibly get that if you're raising a fund. And I think there's going to be more prediction. I think there will be more of it.
Yeah. It's become kind of a meme at this point. Who isn't raising a fund? Obviously,
AngelList made it so easy. It's your fault. It's totally your fault.
Well, I won't take credit for it. I'll give it to the team. Okay. But yes, that going back to what was said earlier, AngelList also reduced the barrier for me to start Weekend Fund back in 2017. They were just rolling out angel funds. And at the time, you would have had to piece together all these other tools and lawyers and everything else. And just simplifying that in kind of one full stack process is super helpful. So, very much appreciative of that. But yeah, what are your thoughts?
I think it's worth like, I guess, just to paint the counter so that we're not like all saying bullish things. I mean, I think a lot of people are going to see a lot of paper returns that they had in the last 2 years get wiped out in angel investing. Capital is going to get a lot more expensive. I don't think that's high interest rates are changing for the next year or so. So like we're coming off like the most bullish, crazy times where like there was nowhere else to put money and everyone was like, hey, let's throw in a private investment. So yeah, when capital is like that available, more things emerge like emerging funds. I think some parts of it are like kind of like changes that won't go away. Like everyone wants a founder as an investor. Actually, I worked with 5 people on boards for the last 2 companies, and I've always picked a VC that has founded something. And it's just like, I feel like it's always paid off. So people want to work with founders. Founders have access to deal flow. So I think a lot of things are not changing, but I do think last year we probably peaked in terms of how many funds were created, and we're not going to go back to that peak probably for several years. And a lot of people who did raise funds are not going to be able to raise their next fund, or at least then the next one will be smaller. So yeah, I don't think it's going to be all bullish, especially in this like downtime. Like there's a general, whenever things are tight like this, people tend to go towards safety, and like existing funds with a longer track record are what safety is.
Yeah, well, that's a good point too. It actually reflects what we see in different spaces and emerging categories. So let's take crypto as one example. During the bull run, it felt like everybody was starting some sort of crypto company. And as a result, there are more founders that might be starting crypto companies that wouldn't have otherwise because it seems easier and it's more accessible. And so there's sort of like this fair weather founder, fair weather investor kind of dynamic that happens in these bull runs. And what happens is kind of the people who are most committed and maybe theoretically best at the job stick around longer term. And another thing about this, as there are more funds emerging, it just creates more competition and more need for like diversification or differentiation or some sort of unique value add. And actually, I want to take this to you, Karine, because you have a unique kind of approach with the agency and fund hybrid model. Like that's not, there are other people that do that, but not very many. And other funds have different differentiators or different unique paths. But how do you think about that as like a core part of your strategy? And yeah, any thoughts on just other ways that you've seen other people diversify as they've like started funds as founders?
Yeah, I think it's interesting. As an agency, we've actually done a fair amount of rebrands for existing venture firms in the last sort of like year or so. And so I think as capital has become more commoditized over the last few years, founders like that are raising obviously want like that value add investor and almost ask like every investor, hey, like why should you be on my cap table? And so I think overall as like a trend, I would say like there's a lot of pressure on funds, and we've seen this from a client perspective to really understand their differentiation in the market, especially at the earliest stages. I think funds that are, I think there are a lot of like really interesting early stage funds and emerging funds that have started. Obviously, like the agency is kind of like one model. I think the flip side, even though like it is great, obviously, I think from a fundraising perspective, it can obviously be something different for LPs to understand. And so I think there's definitely kind of like that flip side to it too. But I think there are a lot of really great funds. Like I'm sure we all know, like Not Boring, like Packy, and sort of like the newsletter, and obviously the media he can obviously generate for a lot of founders. I think there's obviously countless others that I obviously forget when I'm talking, but I think there's awesome ones that are all doing really interesting things. I think that we do this a lot at Slope. It's kind of like, what is your reason for being, and like what do you want to be known for? And I think that's ultimately like what brand is, right? And so I think that differentiation becomes just like even more important for both like startups and funds as like competition grows.
Yeah, and I don't want this to sound like a plug, but one approach we've been taking at Weekend Fund is thinking about how do we help other basic co-investors. And the selfish reason is, we're a collaborative investor, we're writing small checks. Some of our best deals are coming from other people like all of you on this panel who are also investing in early stage. And so we're doing things like Signature Block and newsletter for like emerging managers to help answer their questions and hopefully be a resource for them, in hopes, frankly, selfishly, that they'll send us great deal flow in the future. And so that's sort of how we thought about one of our angles or one of our strategies. It's actually not differentiation for founders, but it's differentiation for the ecosystem. And how do we position ourselves in a way that's unique and hopefully valuable? So that's how we've kind of approached it. But like Siqi, I don't know, how do you think about like differentiation? Like how I don't know, what any unique examples, or how do you think about your differentiation as like, everyone is starting a fund nowadays, it seems?
I don't really think I have any. I just think of it as a personal vehicle that I'm rolling up other people who want to invest with me personally. That's it. So to whatever extent I personally have differentiation, which is probably pretty minimal, I don't think about it in sort of professional branding terms. So I'm just not at that point yet, and it's not the purpose of the vehicle. And I think that's probably okay for a lot of emerging fund managers, right? Like you can pretend that you're some kind of professional fund, or you can just be, look, this is something I'm doing on the side to help out founders and learn. And I think that might actually be perceived as a little bit better than trying to be something you're not.
Well, you're actually touching though on so you've been, building companies and building a network, and you have people that trust you, and you have relationships, and you have credibility, and you have all these things. So it kind of goes back to, in some ways, it's not even about differentiation, but it's about leveraging and using all this knowledge and access and network that you built, over a decade or two. And I kind of appreciate that, because a lot of people like to code over how they're so different and so unique and so special. And when in reality, sometimes you don't have to actually have that kind of like unique message in the world to be successful. But any other thoughts on, like, I don't know, trends or future predictions in venture? Anything you've observed as the market's also shifted quite a bit from going, this massive bull run to, I don't know what we are now. It's more of a bear market. Any thoughts on the ecosystem as a whole?
I think there was a trend in the last few years where there was a lot of party rounds, and leads for rounds were seen as like unimportant. It was like, hey, why should I get a lead? I can just get like 20 investors to give 100K each or whatever for a seed round. I think a lot of like the old school good entrepreneurs still valued leads, and like I got a lead for Mercury, even though I could have done a party round easily. But the new entrepreneurs did not really see the value of leads. I think we're going to see a shift again, where in this downturn, you're going to say, hey, I mean, obviously just the lead will help coalesce the round, which will be useful and will be quicker. But I also think the fact that like there's someone there who has some vested interest to like, help you out if like funding pauses, and like they have reserves to back you up. Like if you've got a party round, like, unfortunately I'm involved in party rounds, and like someone's like, oh, we're running out of money, like, can you help? And I'm like, okay, I'll try to help, but I don't have like a big fund with reserves and things like that. So the people who've done really well in the last 9 months, when the company's obviously like doing okay, but they've struggled raising, is the people that have lead investors that have a deeper pocket and can like help them kind of get through the time. So I think there was a lot of lessons about why lead investors are good that were like forgotten in the last few years. And I think they're coming back, and there is like, obviously the wrong lead investor can kill you, but the right lead investor can like definitely save you.
I agree, but I don't know, we're also seeing this trend towards, there's different words for it, party rounds, community rounds, whatever you want to call it. And there's also this cultural movement more towards like ownership, and, consumers and users that love certain brands or companies want to be, a part of it.
I actually don't think those things are like at opposite ends. Like Mercury's seed round had 60 investors, but there was a lead investor. So there's no reason not to do both. And actually the most valuable founders or community members, etc., they don't have big checkbooks. Like it's not like, they're going to take up your whole round. So you can easily have a lead investor with like 50-60% of the round, and actually gives you more space to have lots of people around the table to help you. And I deliberately sought out lots of people to back Mercury, because I want everyone to help make us successful. I don't actually think those two things are in opposition at all.
I think I see it a little bit differently in Immad. I think everything you said is true, but I think part of it is colored by the fact that you're an experienced second time, third time, fourth time founder, and you can see ahead. I don't think most founders are thinking that far ahead, as like, if I had a lead and they're going to be back me up with reserves. And I think there's also a long-term trend of like, now that there's capital availability with a bunch of founders having exits, the capital is available for you to actually get these parties rounds done. And I think that's still going to continue. And then there's also the dynamic where, as a first-time founder, it's just harder to get a lead, right? Like, second-time founder, you can go to Andreessen and Sequoia is like, hey, look at me, give me a term sheet, and you can get into the door. But for a lot of first-time founders, the party round is a method of like, hey, we can just rolling close, get some money, get going. So I don't think the amount is going to change. I do think like in terms of the absolute numbers, I think we're going to see more and more party rounds getting done. But I think the best founders who are second time have access. Certainly a lead is always going to be more helpful.
But don't you think that kills the dynamics for party rounds? If like if the best founders / the best companies always get leads, then like party rounds become like kind of self-selecting to be like worst rounds. Like that could be a vicious cycle, right?
I think there's also just capital availability. Maybe it was an anomaly last year, but I think the trend is also fairly clear in the sense that like those party rounds that have been recent, like your round, not every random person with 50K could have gotten into Mercury, right? The allocation was extremely limited, and there's more companies that aren't as good as Mercury that are still fundable by people with money. So I think the absolute numbers are still going to increase over time.
Immad, where was I when you were raising for Mercury? That's what I want to know. We should have been introduced when that was happening.
I'm sorry.
Next time, when you're a third timer founder.
Well, what about
a fifth company if I do another one?
Geez, number 5. You love the torture, don't you? I mean, so what about people who don't raise money, like Sophia? So your latest company, not VC backed, not because you can't raise money by any means, but because you don't want to, at least not right now. But like, how do you think about that? Is that also a trend? Are we going to see more maybe second, third time founders not raise VC capital because one, they have credibility, maybe they have a little bit of their own capital to like kickstart things. This is a trend that well, I don't even know if I call it a trend because it's not that common in technology entrepreneurship. Certainly it is in like normal entrepreneurship. But how do you think about that, Sophia?
I'm not building a technology company, and I think I've built companies that aren't technology companies that were valued like technology companies at a time when, in 2012, building a fashion e-commerce business, I bootstrapped it to like, 12 million on a run rate to 28, owned 100% of it. When Index invested and priced it at 350, and years later, we were doing over $100 million in revenue, and that still wasn't enough. The multiple of that became like a private equity multiple. And that really kind of fucked up our opportunity to continue funding the business, even though like on every level, that is a successful business. I'm building something with existing software. So business class, I'm the content is what matters. You don't need to build your own online, course platform, your own digital community. We use Kajabi and we use Mighty Networks. We use Zapier. We use like Drip. We use like all of these products, and some of them that didn't exist right 5 years ago. I think you would have had to build your own platform to host an online course, or you'd have to put it on a marketplace like Udemy or something like that. I like to own my brands. I like to have my properties be something that I own. Then after having just so many stakeholders for so many years, and building teams and being crucified at times for not doing the, everything right, I just like, I'm giving myself a break on that. And I don't know if there's going to be a point where I raise money again, but the word stakeholder like makes my stomach churn, and I would rather be one than have them, which is also why I'm raising a smaller fund. It's not my big job. I'm not going out to people who are going to do 30 reference calls on me before they give me money and take a year. Like, I don't want to be raising money year round. And for a smaller fund, I think it's going to be a lot easier. And I'm doing it with LPs, mostly who I've known for a really long time and haven't gone out to strangers yet. And I'm going to need to, because I don't know if I'm going to fill it up with, just, former, investor guys and entrepreneurs. But I have 2 employees. My business is super profitable. I don't have anybody running the fund with me. AngelList, again, made it possible. I would not have done it had there not had, I looked at Carta and I was like, oh my God, this is so overwhelming. And, I wouldn't have, just in the same way, I wouldn't have started Nasty Gal without eBay having given me the framework to understand, okay, a product title and a description and customer service. And I'm going to be rated on my level of customer service. And all these, and now there's just such a suite of platforms for people to build businesses, and AngelList is one of those, is pretty much, the only and best, the only thing that I strongly considered to manage my fund. And without that, I think it would have just been like really overly complicated. And I don't know if I would necessarily have done it.
Yeah, I mean, this is a whole other panel discussion to be had on capital needs and team size needs and things like that. I mean, I think we're seeing, of course, as of recently, like a lot of AI powered tools give people essentially 100x like leverage. And historically, engineering has been the most leveraged in terms of tool sets, but now that's being applied to design and marketing and sales and all these other functions. And so it does make me wonder, is the next multi-billion-dollar company going to be a couple people? Do they actually need, multiple millions of dollars to build a business? Of course, that's all contextual. Each business is its own, different beast. But I feel like this may significantly change the dynamics of capital needs for founders and the way that we invest, I think. But let's close it out maybe with like, I don't know, what do you, maybe each person can go around and say what you're excited about to invest in. I know a lot of founders are going to be on this call and LPs, but a lot of founders are probably tuning in. And share any plugs. Karine, do you want to go first on that?
Sure. Hopefully this one's not super surprising, but I think generally we obviously are a creative agency and so believe in the power of brand and creative to make a difference, whether you are a consumer company, a B2B company. Ultimately, you're selling to a person who has emotions and feelings at the end of the day and wants to love brands. And so I think broadly, whether it's like Web3, Web2, dev tools, et cetera, we're excited about companies that believe in the power of brand and believe that can ultimately change the trajectory of like their business.
And where can they find you? Any plugs, URLs, Twitter handles?
I'm on Twitter. Twitter works. It's just my name with an underscore between my first and last.
What about you, Siqi? What are you looking at nowadays?
It's really hard because I think exceptional companies are always new, so it's hard to look at what happened in the past. But generally, one of the big tells is it's an earned secret. Someone has been thinking about this for 5-10 plus years, absolutely obsessed with the idea, and there's an opportunity. And only incidentally do they want to start a company, need some capital to make it happen. Those are the things that really get me interested, as opposed to, I was thinking about startup ideas and it seems like Netflix for business or something seems like a good opportunity. So if you're one of those people with that kind of idea, I would love to talk to you.
What about you, Immad?
I guess one thing that maybe is obvious to people and a second thing that's not. On the obvious side, I'm pretty into kind of this new surge of AI. I happen to be a lucky investor in Jasper, and I've seen how they've grown. They're basically like a GPT-3/LLM based kind of copywriting thing. But I think there's tons of B2B applications of AI that are interesting and just like being explored right now. So I would love to invest in more of those. On the non-obvious side, I think fintech is a little oversold. Last year, it was definitely over the top. Everything that was fintech was getting invested. Now everyone seems to hate fintech, which is, I think, a perfect time to be investing. Not all of fintech. I think lending fintech and most of insurtech will struggle, but I think there's a lot of other fintech infrastructure, B2B fintech. I think even global fintech that has, fintechs like whatever. Financial services are like 20% of GDP or something insane. So I think there's tons of opportunities there, and I'd be looking out to invest in those.
Sophia, what are you looking at? You've invested kind of all across the board, so similar to us, I feel like.
Yeah,
anything you're excited about now?
I love consumer brands, but I've already spent enough time in my life exposing myself to risk, building kind of direct to consumer brands and products. And while, I've invested in a couple CPG businesses and a beauty brand with the fund. And what I've been most excited about over the last year is kind of this consumerization of like SaaS in a way, like Shopify is for the end user. Like the girl who read Girl Boss didn't consider herself like a founder. The person who's, maybe funding their business with Pipe is not, someone who can even raise venture capital. they may be a bootstrap business. So most software, consumer software focused on consumers that allows them to make money, save money, find alternative funding, sell their products on a marketplace that is something that's really new, like video shopping, which Pop Shop Live is. And then also software enabled and, accelerated things in, I think, the healthcare space. That's not a super deep space for me, but products that benefit people. Like, I've put enough shit into landfills. I don't need to do any more of it. I don't even know if aluminum's nothing's like 100% recyclable. I invested in Cove, which is the first biodegradable water bottle. So that's been really exciting, but primarily, consumer focused software that does have a brand and a new way of empowering people to take care of themselves, make money, save money, build businesses.
Yeah, I too am very interested in companies that enable entrepreneurship across the wide spectrum of entrepreneurship. By the way, I didn't start anything nearly as successful as Nasty Gal, not even like 0.11%, but I did have an eBay business in high school. I was buying and selling stuff. So
amazing.
Shout out to eBay for my entrepreneurial, scratching.
And one thing I forgot is you can email me at Sophia you email your pitch, whatever. Sophia at trustfund.vc. I'm on Twitter at my name. I'm on Instagram at my name. You can check me out at.
Sophia's got a good Instagram.
Thanks.
It's worth a follow.
I try. It's we were talking about using our social platforms to I guess get access to deals and provide thought leadership to like the venture community, but it's also something that's an asset that you can provide to founders to help amplify their businesses on the flip side. And just another value add that, again, if you're talking about differentiating yourself as an investor, that's something that can be really helpful to your portfolio companies. And that's something that I also do on my social.
Yeah, you're really good at that. Awesome. Well, thanks for coming on. Appreciate everybody's time on this.